Hello everyone and welcome to algotrading.pro. In this video, I will discuss trading bands, what they are, how to implement them in Zorro Trader, how to use them, and so on and so forth. And this video is, as the previous one, part of our Zorro Trader Beginners series. So you'll hear traders talk a lot about assets being overbought or oversold. What exactly does that mean? Well, it means that sometimes the prices are higher than the true value of an asset, or sometimes they are lower. Now, how do we determine true value? Probably nobody knows, but we can look at some averages over some time period. And if the prices are far away to the last, the average of the last, let's say, 20 days, then we can say, well, this looks a little bit overbought. And if it's the other way around, then we can say, well, this asset is oversold. This is the purpose of all trading bands, to determine on a relative basis if the price of an asset is too high or too low. So in this video that is posted on YouTube, I will discuss Bollinger Bands. And Bollinger Bands are based on a statistical measure called standard deviation, a measure of dispersion. Also, we already have a video on our website, https://algotrading.pro, in which we demonstrate Keltner Channels, which are a different type of band. And Keltner Channels use the average true range as the volatility indicator. And also, we will discuss how you can use multiple trading bands in the same strategy, in the same script. And as you will see today, it gets tricky. It can get tricky. So if for whatever reason you need to use two Bollinger Bands in your script, or Bollinger Bands and the Keltner Channels in the same script, or percentage bands, or any other type of band, right? Bands, then please watch our video at algotrading.pro, because things can get tricky. Registration, of course, is free. No credit card is required, just an email address and the password, and that's pretty much it. All right, so let's take a look here at some visuals, right? So the first thing I wanted to show you was a picture, right, of Bollinger Bands, right? So here we have an asset. I'm not sure what it is, but it doesn't matter. We have this asset, prices go up, prices go down. We have all these fluctuations, and here in the middle, we have something that looks like a moving average, right? So this is the average price, right? Determined by using a moving average for the last whatever number of days, right? And we can tell that, here prices are far away from this moving average, right? They are far away, up here. Sometimes they do the other thing, the prices, right? They go down, and here you can see that they even cross, the lower Bollinger Band, right? So these are the Bollinger Bands. This is some sort of a moving average, and we have the Bollinger Bands here, upper band and lower band. So the name, of course, John Bollinger, the creator of these bands, who has dedicated his life to studying these bands. I read some of his books. They make an interesting read, and he actually developed in the 60s some of the very first algorithmic trading systems by using these Bollinger Bands. He is a very interesting character. So all right, so as you can see here visually, right, when the prices are at the upper band, they sometimes keep going up, right? So like this trend here, but sometimes they come down, right? Sometimes they come down. So you can use this as a mean reversion strategy, type of indicator, or You can use it as a filter when, you know, trends usually begin with prices moving far away from the moving average, right? So that's not the point of this conversation. There are many systems, trading systems based on Bollinger Bands out there. But anyway, so these are pretty much Bollinger Bands. And John Bollinger on his own website here, he has here Bollinger Bands rules. Please read this; it's important. And he emphasizes that the bands just by themselves are not a system of trading rules. But anyway, so Bollinger Bands basically use the standard deviation as the measure of dispersion. So here, in a typical setup, the moving average is 20 days, and the bands are at 2 standard deviations from the trend. Now, as volatility changes, of course, the bandwidth, the distance between the bands, changes. When the market is not very volatile, the bands are narrow. When the market is highly volatile, the bands are, you know, far apart. So standard deviation is what John Bollinger used to create these bands. And then, you know, just for your edification, on even older, I think, trading band style of indicator is the Keltner channel. He was created by Chester Keltner a long time ago, and he thought that the ATR is a good indicator for volatility. So he did not consider the standard deviation. And maybe you remember that we plotted some ATRs in the past and some standard deviations, and the two indicators are correlated, but they're not the same. So they're not identical. They give you different types of information. You know, when even just simply visually examining them, you'll see that they're not the same thing. And here is probably one of the oldest type of trading band, you know, the percentage bands. So this is simply, you know, a moving average, or just the price itself. I think here is just the price, and you have, you know, 10% up, 10% down, kind of. So you have these bands. If the price is, you know, close to the upper band, it's overbought. If it's close to the lower band, it's oversold. So multiple kinds of trading bands. And I have to tell you something about Bollinger Bands that I think it's important. How are they calculated? Well, theoretically, it's simple, right? You have a moving average, and you know that prices are 90-something% of the price is inside 2 standard deviations, right? And then this is how you draw those bands. And John Bollinger recommends 20 days for the moving average and 2 standard deviation for the bandwidth. But then he just can't leave things alone. So here where he describes, I mean, at least Investopedia describes the moving average and the calculation of the bands and stuff, you know, he comes with something called typical price, high plus low plus close divided by 3. Yeah. So this isn't really our simple moving average thing. And I saw in his books that he keeps changing this stuff. So I think in Zorro Trader, you know, they implemented things in a simpler manner. But anyway, it doesn't matter. This was just something that I thought was funny, how he keeps changing the calculations. All right, so let's see how we can implement the Bollinger Bands system here. So the bands themselves. So here is the strategy template that we have, and so let's see. So you know that setting this flag plot now will automatically produce a plot when we run the script, and you won't have to click the result button. You know this internal Zorro variable bar period, right? So 1,440 days is a full trading day. So we're trading daily closing prices. Of course, you remember we need the prices, right? And we'll use the series function. I hope you remember all this by now, because you've seen this in every single video, right? So we'll use the internal Zorro function price close in order to obtain the prices, right? And what asset are we trading here? Well, it's Microsoft that I chose, like in the previous video, look, you can hard code your asset like this. Okay, so if you don't want to select from the drop down, you can just hard code it like this. So by doing this, you kind of disable the effect of the asset drop down menu. So people do this sometimes, and it's really important for other things. Right now, it's just a simple way of specifying the asset we're trading. Okay, so we have probably the last 5 years of Microsoft data, which is the Zorro default kind of period in the backtest, unless we specify a different period. And now, of course, Zorro Trader knows what Bollinger Bands are, and the function is Bollinger Bands, bands. it's right here, okay? And it takes as arguments the data, meaning the price here. You can construct Bollinger Bands out of anything. You can construct them out of moving averages or whatever. But typically we use the price curve, right? We need a time period. I mean, you can read here. Zorro helps us remember what we need. Okay, so we need a time period. And John Bollinger recommends 20 days, right? And then we need the number of standard deviations up or down. So number of deviations up and number of deviations down, right? So they can be different. If you choose to use one standard deviation for the upper Bollinger Band and 2 standard deviations for the lower one, or vice versa, you can do that. John Bollinger recommends that we start with 2 standard deviations in each direction, right? And then we need a moving average type. And I'm gonna just use one here, which I think it's a simple moving average. You can look into the Zorro manual and see what's available, because you can use exponential moving averages and whatnot. So, all right, so this is the function, right? This is the function that will generate basically the numbers, right? But we have to store those in a series, right? If we're thinking about crossing over or crossing under and whatnot. So we will create a series here and we'll call it BB. Unimaginatively, I'm gonna call it BB. So we have now the price, we have the Bollinger Bands, and before we try to trade something here, basically the scope of this video is not so much about trading but programming. How do we plot this, right? So how do we plot these Bollinger Bands? So remember the plot function, right? So we want to plot the Bollinger Bands, and your first instinct here would be to do the same thing we did with the moving averages, right? So plot, Bollinger Bands, and then of course we need the variable to plot, which is BB here, right? And then we need we're not gonna put this in a new panel, so let's make it a line as a type, and the color, let's make it, I don't know, blue. So what do you think we will get here? So your intuition is probably that we can plot the Bollinger Bands and any other trading bands in the same manner we did with moving averages. Well, that is not so. That is not so. Well, let's see what happens if we run this. So what are we getting here? So, oh, I made a mistake somewhere. Oh, of course, I always make mistakes. So basically, I forgot the series functions, the series function. All right, so I forgot to make a series out of the Bollinger Bands values, right? So Zorro prompted that this isn't the right way to do it. So okay, so the thing was, are we going to be able to plot the Bollinger Bands in the same manner in which we plotted the simple moving averages? And obviously no. I mean, this doesn't look like Bollinger Bands. It seems like it looks like the upper band, but where is my middle band? Where is my lower band, right? So what happened here, right? And the reason for which this is a bit more complicated is because Bollinger Bands are different than simple moving averages, right? The simple moving average is a single value, but here you have three values for every candle, right? An upper band, a middle band, and the lower band. So why is the upper band being plotted here and not the middle band or the lower band, or what exactly is going on here? And in order to understand, I will explain this to you. It's an internal Zorro thing. So whenever you create bands like these, right, or things that have more than one variable, right, bands in general, whenever you create such an object, we just did here, right? Whenever you create such an object, basically what happens is that inside the memory, Zorro creates three objects, pretty much. And these three objects are called R real upper band, R real lower band, and R real middle band, okay? Why does Zorro do that? Because we need these values in this separate sort of fashion. Maybe we could get away with the plotting in something like this, but when you want to check for a crossover or something, right, a single type of variable like in this manner will not work, right? Cross what? Cross lower band, cross, we have just a single object here, BB, right? So when Zorro creates this object, these three variables get created and initialized at every candle, right? Real upper band, lower band, and middle band, and we can use them separately, okay? Of course, you need to know this in advance, and now you do. So, all right, so how do we plot this correctly? Well, we use those values, right? So upper band, and it's not going to be BB, right? It's going to be the R real upper band variable. Okay. And then let's plot the lower band. The lower band. And of course, this is going to be the real lower band. Okay. And then let's plot the medium band. The middle band, I'm sorry, the median. There is such a thing as a median band, but it's not about that here. So the middle band, okay? Middle band. And we are going to use the real middle band here. All right. Now, colors. Let's make these two green. And let's make the middle band blue. All right. Okay, so let's see what we get now. Now it looks like the picture we remember from Investopedia, right? So here you have a simple moving average, and then you have an upper band and the lower band. And now everything is displayed the way we expected. And remember, we need these three variables. And these are the same for Keltner channels or whatever other trading bands you want to use. You know, when you call the function that creates the object, the Bollinger Band object, right, in the memory of the computer, these three variables are created and initialized by Zorro Trader. You can use them to create trading logic or to plot or to do something else and so on and so forth. So, all right, so let's see, you know, if can we trade this? I'm sure no, but just for the fun of it. So what I've seen on the internet is that people say, well, when the price is above the upper band and it crosses under the upper band, then we go short, right? Because the asset is overbought and the price is gonna come back down. So, okay, how do we code that? Well, we use the if clause, and we say, well, if BB, well, it's a crossover, right? So we have a function for that. I'm sorry, crossover, right? Who cross under? I'm sorry. Let's start with the upper band. So if the price crosses under the upper Bollinger Band, so you would be tempted to use this guy here, but no. The variable we need here is this internal Zorro variable, the real upper band. And so do not use this, use this, okay? So if the price crosses under, so it comes from up there down inside the Bollinger Bands, right? Enter short. Okay. Conversely, if the price crosses over the lower band, the real lower band. So again, we are not using the BB variable here. We're using the Zorro internal variables, upper band and lower band. Then we enter a long position. Okay, that's pretty much it, right? So this is not gonna work, guys, primarily because Microsoft is trending. So mean reversion strategies like these, they rarely work on trending assets, but let's see what we get just for the fun of it. So we test here, and I'm sorry, something went wrong. Okay, so here it is. So we're obviously losing all our money, and we see some crazy effects here. The first one, again, you've seen it in the video before. It enters and long or short every time when a crossover occurs, right? So these are all bad shorts, right? And remember, the way we got rid of this behavior, unless of course you want this behavior, but if you don't, then we have the variables max long equals max short equals 1. And in the previous video, we mentioned these two variables, maximum number of long trades and maximum number of short trades. And we initialize them both with 1 trade. So after this, the system will be only in 1 trade at the time. All right, so we're losing less money because we place less trades. So now, one thing I wanted to show you was that when the market is kind of mean reverting, you know, sometimes we do get a good trade. So look at this one here. Let me zoom on it, right? So this is a long that worked. So basically the price crossed over the lower Bollinger Band and we entered a long trade, and then when the price crossed under the upper Bollinger Band, we exited that position. Okay, so this, you know, when the market is kind of mean reverting like it was here, strategies like these can work. But again, don't try this at home. This is just for the teaching purposes, training purposes, right? So so this isn't tradable, but I wanted to show you how you program these trading bands and how you use them, because it's different than the moving averages that we've seen before. Okay, and now to exemplify the problem, the tricky part that I was talking about, where things get tricky. And again, there will be a detailed video. There is already at our website, so go see it and subscribe if you didn't do already. But here is the problem. I will exemplify the problem. I will not tell you here on YouTube how to fix it. For that, you will have to come to our website. But it's free, guys. Come on. I mean, it doesn't cost you anything. So here is the problem. So let's say I want 2 Bollinger Bands. So I just came up with this super clever idea that, oh my God, if I use 2 Bollinger Bands instead of 1, right, to pairs of bands or whatever. This is going to be the magical crystal ball that it's going to figure out the market, right? And somehow in my head, you know, I believe that if I use two different formation periods, right, 220, you know, somehow this system will make me rich, right? So I'm making this up, guys. Honestly, I'm not serious here. I'm joking, but I want to exemplify a problem that you may encounter when you want to work with multiple bands in one script, because there are situations when you may want to use Bollinger Bands in conjunction with Keltner Channels, for example. That is something valid. What I'm doing here, it's not, but that's a different story. So, or maybe this may be valid. I don't know. But anyway, so you want to use two bands. Well, of course, you have to name this something different. Let's make this BB2. I don't know. Okay. So remember, let me show you the before and after, right? So here we have I'm commenting out this line. It will not get executed, right? So right now we take a look here and we see the bands, right? And I will remove the equity curve because it doesn't really matter, right? But here are the bands. So they change pretty quickly, right? And the moving average too. And now what I'm going to do is I will uncomment this line. So now somehow, you know, I will construct some magical trading logic here in the future. But, you know, I have the second Bollinger Band, the second pair of whatever, tuple of Bollinger Band. I'm saving this. I'm running it. What do I get? Well, oh, okay, I forgot a look back period. Of course I did. So we need a look back period here when things are more complicated. Zorro Trader usually figures out the look back period by itself, but when you have situations like here with two Bollinger Bands and stuff, you have to specify the look back period. The look back period here is completely irrelevant, and we're gonna add it here because the script won't work. Otherwise, of course, the look back period is important in general, but here it really doesn't make a difference. Okay, so now we have the look back period, and I'm running it, and what am I getting? Well, what do you know? This is different. So, which pair of Bollinger Bands is this? Well, it changes slowly. The 20 days Bollinger Bands were changing fast. These bands and the moving average are changing slowly. So obviously, the second pair of Bollinger Bands is what got plotted here and got used for the trading logic, right? So the trades aren't the same, right? If you examine this more carefully, you will see that with the first pair of bands, right, the situation looks like this, right, with the first pair of bands. And with sort of the second pair of bands, right, what do we get? We get very different trades, right? The trades are different, the bands are different. Well, why do we get this spurious effect? Well, actually, it is expected behavior, right? It is expected behavior. What happens is that when the second Bollinger Bands object, if you will, gets created, well, these variables, these internal Zorro variables, are initialized for a second time. So they no longer contain the values from here. Now they get their values from here. Does this make sense? I hope it does. So no matter what magic combination of Bollinger Bands here I could come up with that will make me rich, this is not the right way to program it. Right? So programming, you know, multiple bands, the same kind of band or different kinds of bands, but multiple ones in the same strategy, it's a little trickier than this. So please come to our website, Algo Trading Pro, and learn how you can solve this problem and how you can freely use as many bands and channels and other things in the same script as you want. Thank you very much for watching this video, and please give us a like and subscribe to our channel so you won't miss any future videos. Please share this video with your friends, and happy trading.